Welcome to Underground Wealth Secrets, hosted by Julie Houston on behalf of Bob and Ed Diamond. This is your friendly guide on leveling up your business, achieving financial freedom, and changing people's lives. This is for serious players who want to surpass their current stage and move the needle further. Tune in to get practical advice and eye-opening stories of industry leaders across the nation, teaching you how to scale your business with a strong financial mindset and true to your core values. Let's get this discussion started with your one and only host, Julie Houston.
Hey guys, it's Julie Houston with UndergroundWealthSecrets.net podcast, and I am so excited today. We have Jason Hartman on the show. Jason, well known in the real estate industry, has decades of experience, and he's going to be sharing a lot of valuable information with us today right now. So Jason, welcome to the show.
Thanks, Julie. It's great to be here, and it's been great knowing you and Bob and Ed all these years, and we're finally doing a show together. So it's a lot of fun.
I know.
Yeah,
this is great. So actually, why don't we start off? Why don't you tell us a little bit about yourself and your background, how you kind of ended up in this niche and space?
Sure. So for the past 18 years, I've been in the business of helping investors buy properties nationwide in good, what we call mostly linear markets.
Mm-hmm.
There are about three kinds of different real estate market categories in the world or in the United States as well. And they can be broken down into linear, cyclical, and hybrid markets. And we like these really solid, conservative linear markets with good cash flow, stable appreciation rates. They're not crazy. They don't make the news a lot, but they really, really produce good returns on investments. And so we've been helping people do that through my podcast, my YouTube channel. We've helped thousands and thousands of investors do thousands and thousands of deals all over the United States in these good markets that we vet and recommend to investors. And I got my start years before that in traditional real estate. I had a real estate company that I sold to Coldwell Banker in 2005. So people say my timing was very good in terms of that exit.
Timing.
Yeah. And so it's just really fun. My first love and why I got into real estate when I was 19 years old was to help investors. I really just love the investment side of the business. I think income property is the most historically proven asset class in the entire world. And that's what I teach people, how to do that properly.
Nice. Well, that's exciting. A lot of people need to learn that right now. So are you seeing any kind of challenges today, currently, like with the market and the changes? Do you have any feedback that you would be able to provide with that?
Oh yeah, most definitely. And you know what? I'll actually just share my screen, and if people are listening on audio only, we can just explain what's on the visual here. But for people on video, they'll see it. So the Grim Reaper has already hit the stock market. It's definitely hit the cryptocurrency market, and we all wonder if it's knocking on the door of real estate. And spoiler alert. I don't think so. I think that real estate is really quite solid looking for the future. But even if we should be concerned that this appreciation is coming to an end, mm-hmm. and there's going to be a downturn in prices, people perceive this incorrectly. When they talk about the real estate market and whether it's good or bad, they usually think good is when prices are going up, and they think bad is when prices are going down. But what they don't think about is that income property is a multidimensional asset class. And so when you see prices rising quickly, that's usually a result of really good housing affordability, which means a lot of renters who are currently renting get sucked out of the renter pool into the homeowner pool.
Yes.
What does that do to rents? It puts downward pressure on rents. Whereas when affordability is low, we typically have higher interest rates and prices aren't going up, and maybe they're even going down, and people aren't excited to buy. They feel no sense of urgency, so they don't buy. and they stay in the renter market. And that renter pool just expands and expands, and it puts upward pressure on rents. So as income property investors, we can win either way because we have this beautiful multi-dimensional asset class. And what we do is we simply adjust our strategy. Sometimes our strategy is a capital gains strategy where we're making huge strides in appreciation. And I know that feels better. I know it feels more sexy. It's faster. It's more instant gratification. You know, we look at the value, we go to Zillow, we think, oh my God, I only paid that for that property and it's worth so much more now. That's
I know.
great, you know. But really, that's not investing. That's just speculation. Okay. Investing is yield oriented. It's cash flow oriented.
Yes.
And so when the market softens, in quotes, it usually means rents start to rise more quickly. Now, lately, everything's been going up on both sides of the equation, both rents and certainly prices, as we all know, but rents are through the roof too, because we just have a general inflationary economy and we have a very significant housing shortage. But mark my words, rents always lag prices by at least 2 years, if not 3 or 4 years. And if you think rents are high now, you ain't seen nothing yet. Rents have a long way to go up to catch the appreciation. They always lag the appreciation. The appreciation always happens first and rents come up slowly. And let's just think about why that's true for a moment, okay? Here's why it's true. And we all know this, right? So just think about the dynamics of the market, right? When you look around your neighborhood and you see all these houses selling, right? And they go on the market, and every house in an appreciating market goes on at a higher list price, and everybody thinks, oh my gosh, really? Are they crazy? They can't get that much. And then they do, boom. You know, they get that much with multiple offers. Yep. And then another person is encouraged to sell because, hey, it's the greed factor, right? We're all thinking it's a great time to sell. You know, the market's booming. And so another person sells, and they keep setting higher comps on the values.
Yes, that makes sense.
But when it comes to rentals, typically everybody has a 1-year lease. So the landlord only raises the rents 1 time per year. So rents increase much more slowly than prices. That always happens. I've noticed that for decades throughout my career. And I'm sure it was true long before I got here. Okay.
Yeah. And
so even if we see a slowdown in the market and say appreciation just zeroes out and it's level and nothing happens, it's flat lines, rents are going to continue to increase, and they have a long way to go to the upside.
Wow. I can see that. So I've done I'm from Texas, so it's a non-judicial state. So I do a lot of owner financing for long-term notes and cash flow, but I do see the rental. And that's how we come up with the owner finance model that we use for pricing, is based off the rents in the area to make it affordable housing for people to get into a home. So I see it myself. Every year, how the rent just goes up and up. People can't even, I'm mind blown.
And you know another thing a lot of people are probably thinking now as they're listening to this or watching this, they're thinking, gosh, Jason, you're just being way too optimistic because these people can't afford the houses. The rents, they just can't afford what they have now. The rent is already too damn high. Remember that character years ago? The rent is too damn high. I think he ran for office or something. And, you know, it was a funny meme that went around, you know, maybe 12 years ago or something. But the thing people don't understand about markets in general, whether it be purchase market or rental market, or any market, could be automobiles, houses, groceries, you know, whatever, right? Is that the person who is renting the house now or buying the house now in an inflationary environment is not the same person or family that will be renting it next time around. What inflation does is it simply lowers the standard of living. So the person that can afford it now won't be the same person that can afford it later. It will be the person above them on the socioeconomic ladder that moves down that affords that house now when the rent goes up. And everybody moves down the ladder. That's inflation. It sucks. It's terrible.
Yeah.
Okay. It's a robber and a thief, but it's happened, for well over 100 years. Okay. We've seen lots and lots of inflation since the creation of the Federal Reserve in the early 1900s. And we've seen this throughout history. And if you think the rent is high in the United States or the prices are high in the United States, go travel the world a bit. The US is actually quite cheap. I've been to 87 countries,
wow.
Some of them many times over. I love to travel. And I was born in Europe. I was not born in the US. And believe me, the US is quite cheap. Now, I'm not talking about New York City, okay?
Yeah.
Or I'm talking about America as a whole.
Just in general, there's a lot of opportunity, affordable opportunity.
Much cheaper than go try to buy a house in any area in Europe, okay, or rent a house. You'll get a little crappy flat and you'll pay a fortune for it, a big percentage of your income. In the US, you just live much better. It's a much higher standard of living here.
I would agree. I would definitely agree with that. So you've kind of like in your business, like you're just kind of not having to pivot and make major changes because it's constantly pretty much worked in no matter what market, what economy that we've been in.
Yeah. Well, look, investors do freak out a bit. They think, gosh, just a couple of months ago, interest rates were lower than they are today. And, now they're much higher. So certainly people get frazzled by that. No question about it. But the reality is it's still a better deal. Let me give you an example. And this has always just blown my mind, Julie.
Okay.
For the last 10 years, give or take, I'm just making a general statement here, right? And, generally speaking, during a lot of that last decade, people could get a mortgage for about, 4.5%, give or take. Okay. And the government told us the official rate of inflation was, give or take, I know it varies. I get it. Everything varies. Okay. I'm just making a very general statement here. So don't send me any emails about this. Okay. It's a concept I'm trying to illustrate here.
Yes.
Okay?
Understood.
Told us inflation was around 2%. Okay. So people all day long were willing to take that deal. What was the deal? They were willing to take a 4.5% mortgage when the government was telling us inflation was 2%. But now, as of this morning, literally, the government tells us the inflation rate is a whopping 9.1%.
Wow.
Yet you can get a mortgage at around 5.5%. So let's call it 6%, just for round numbers.
Mm-hmm.
That means the official rate of inflation being 9.1% and a mortgage at 6%, you're literally getting paid 3.1% to borrow the money. That is a negative interest rate. You're getting paid to borrow. But before, the deal that people were happy to take all along is that inflation was 2% and they'd pay 4.5% for a mortgage. So they were paying a positive interest rate of 2.5%. They were paying versus now they're getting paid to borrow.
Yes.
It is extremely rare throughout history. There have only been a couple little points where this has happened throughout since the 40s, since the 1940s, okay? Where the consumer price index, the official measure of inflation, has been higher than the mortgage rate. That is extremely rare, and we have that now. So the benefit of the bargain goes toward the borrower.
Yeah, that makes sense. I've never looked at it that way.
Yeah, most people don't.
They think never looked
rates are so high because what they do, Julie, is just like what you're alluding to. They say, "Oh my God, just a few months ago, I could have got a mortgage for 3%. Oh my gosh, this is terrible."
Yes.
But back then, inflation was lower. It's all relative. Inflation and the interest rate, you simply take the inflation rate and the interest rate, and the delta between the two of those is the real interest rate.
Okay.
That's what you're actually paying.
Yeah. That makes sense. Gosh, when you really break it down like that, it really opened your eyes to the opportunities that are out there.
Absolutely. And just in case somebody doesn't get that, they're thinking like, what are you talking about here? Let me just explain it a little further. Look, interest rates represent the cost of money. That's the price for money. If you want money, you've got to pay a certain price for it. You pay an interest rate. That's the cost of the money, right? Just like, if you go to the store and buy a loaf of bread has a cost, right? Interest rate is just the cost of money. That's all it is over time. So it protects lenders in this equation called the time value of money. But inflation represents the debasement or the devaluation of money. So when we borrow, we get to pay the lender back in cheaper dollars. And right now, officially, the government tells us those dollars are getting cheaper at a rate of 9.1% per year. Now, unofficially, I think the inflation rate is actually much higher than that. I think it's about 15 to 17% in reality. I think most people will agree. But again, we all have a different inflation rate because we all spend differently, right? But we're paying the money back as it's being debased at 9.1% a year. So if we have 100,000 in the bank today, we're going to pay an inflation tax on that money of $9,100 every year. But if we borrow $100,000, we're going to pay it back at a $9,100 discount every year. This is a strategy I developed about 18 years ago, and I actually trademarked the term. It's a mouthful, and you've heard me say it before, but for your listeners, it's called inflation-induced debt destruction. Inflation-induced debt destruction, or IIDD for short. I know it's a mouthful.
It is. I've heard you say it though. I have.
Yeah.
No, I love it. This is like a whole new, I like the whole new view on it. So for investors today, like this, would you feel this strategy would work for any new and seasoned investor? Do you have a lot of new investors come through you training? And
we have both.
Okay. So it's pretty.
We have both. We have seasoned investors that, we've got one that's planning to buy 500 properties through us and is over 130 so far, okay, through our network. And we have some new investors that are just buying their first properties. So we've got all types, okay? And it works for everybody as long as they don't pay cash for the property. If they pay cash for the property, they're going to get other benefits, but not inflation-induced debt destruction, because they don't have a mortgage on it.
Yeah,
that they can pay back in cheaper dollars.
That makes sense. Yes.
Yeah.
So
now, actually, let
me
say one more thing, if I may, about that, Julie.
Yeah, go ahead.
I want to make sure we get this out of the way. One of the beauties of income property as an investment is that the deal, like in most things in life, if you go buy a car today, right? Or you buy a piece of furniture, right? The deal you agreed to when you bought it is the deal you got forever. That's the deal.
Yep.
It ends when you buy it, right? But with income property, the beauty is you never actually commit to the deal. You buy it, and yes, you paid a certain price at the time you bought it, but you can always renegotiate characteristics of the deal along the way because you can refinance it. You can add value to it. You can change the rent or the income it receives. You can get income from other sources. You can change the whole characteristics. You could buy a property today as a long-term rental and turn it into an Airbnb short-term rental, right? You can change these things along the way.
So many different options that you can do.
You can do creative financing, what you do, right? Yeah. You can do a lease purchase. You can do all sorts of great things to change the deal. You constantly get to renegotiate the deal. And it's one of the very few assets in the world that offers you this beautiful thing. You can buy it and then pull all of your money out of it and still own the asset.
Wow.
Show me where else you can do that. I can tell you can do it as a corporate raider on Wall Street. The big wigs, Ivan Boesky, T. Boone Pickens, Carl Icahn. That's what they do. They buy companies with leverage buyouts. They saddle the company with debt. They make the company pay back its own debt that they saddled it with, and they get all their cash out, right? So that strategy does work in a big way, but most people don't have access to that.
Yeah.
We all pretty much have access to buying a house and doing the same thing.
That is true.
Yeah.
Well, I love the feedback and all the information that you provided today. Is there any one thing, if you could give one piece of advice to any new or seasoned investor or yourself, like if you could go back 20 years, what would be the one thing you would maybe suggest or say that could really change the trajectory for someone?
That's a great question. In life, currency, money, dollars, pieces of paper with dead presidents on them, they have no intrinsic value. And in an inflationary environment, which is pretty much the environment we've all lived in all our lives, especially since Nixon took us off the gold standard in 1971, in an inflationary environment, stuff has intrinsic value. So we want to trade our dollars for stuff as quickly as possible, because we know for sure that the dollar has been and probably will continue to be devalued.
Yes.
But the stuff has intrinsic value. So, I'm in my office in my house, right? Look behind me. What do you see there? You see a wall, you see a ceiling, and there's a floor, right? Well, what are those made of? They're made of things. The ingredients to a house are these ingredients that every human being on earth needs. Every person needs food, clothing, and shelter. Let them rent that shelter from you. And think about the ingredients of the shelter for a minute. The ingredients are concrete, lumber, glass, steel, copper wires in the walls. Mm-hmm. It's a lot of petroleum products are used in the construction of a house. A lot of energy is used in the construction of the house, and labor, which is very scarce. This is a low-tech item. Okay, and there's not likely to be any big disruptive technology that changes the cost structure of houses or apartment complexes or anything, right? So trade your currency, your devaluing dollars, for stuff, especially real estate, especially stuff where you can get the bank to lend you maybe 80% of the value of it when you buy it. And then you might be saying, well, I don't like debt. Well, with income property, we don't pay our own debts. We delegate the responsibility of the debt repayment of the mortgage to the tenant. They have to pay the debt.
They have to pay the debt.
We tell them, look, you pay me rent, and with that rent money, I'm going to pay the debt. And, hopefully I'm going to keep a little bit, a couple $100 every month extra. That'll be called positive cash flow.
Yeah. Positive cash flow. That's what it's about.
Yeah. So trade your dollars for stuff. Things that have intrinsic value. In an inflationary environment, that's the winning strategy.
Well, thank you so much, Jason. It was such an honor to have you on the show today. Thank you again for being a guest. If people want to get more information about you, we're going to send them to undergroundwealthsecrets.net/Jason so that they can get connected with you. And we'll make sure that's in the show notes. So again, thank you.
Yeah. And Julie, there's just we've only touched on some of these topics. They can get a lot more on my podcast and YouTube channel. Also, I didn't have time to share a bunch of my slides with you and charts and graphs. If they want those, they can get them at jasonhartman.com/slides. They can download a huge slide deck with all kinds of great info that they might really like. Okay. So,
all right, perfect. Thank you.
I just want to provide as many resources as possible.
Well, we appreciate it because we're trying to add as much value and information for people as possible. So thank you again.
And you're doing it. Keep up the good work, and happy investing to you and everybody in your audience.
Thank you so much. We hope you have a wonderful day. Thanks, Jason.
Bye-bye.
Thank you for listening to this episode of Underground Wealth Secrets. May these nuggets of wisdom lead you to finally discovering your true potential. Become one of the most reliable businesses out there that's dedicated both to filling up your bank accounts and leaving a positive impact on your community. Get more informative and engaging conversations like this one at undergroundwealthsecrets.net. Don't forget to leave a positive rating and share with your friends. That's all for now. Until next time.